See? All right. Hi, Hector. Good morning and welcome to our Tip Tuesday. I have Hector Alvarez with Real Estate Rises. He is a real estate investor, and this morning we are going to discuss how investing affects your financial statement. So I'm going to allow Hector to take it away and share a little bit more about himself and his real estate experience.
Hi, Cindy. I hope you're doing great. Um, Thank you for this opportunity. Again, I'm a real estate investor based here in Central Texas. Um, I have peers all around the states and abroad, and we focus in multifamily from 2 to 4 units and also the commercial deals. And as you said, today we're going to be talking about investing and how it affects your financial statement. And this is going to be pretty straightforward and easy. If there's any questions, please share your questions. We're going to get right in. And the first thing that I wanted to cover is the actual definition of investment. This is very important and it will help us in the future in the presentation. Basically, it's acquiring assets to generate income. That's basically what investing is. And that's going to be very important because the example that we're using right now is real estate. So, a lot of people were taught that buying a house is an investment. Everybody
Correct.
will tell you that, most people. Um, and based on the definition of investment, it should be an asset that creates income. Now, when we look at what we know, a house, a single family house, you pay the mortgage, you pay the utilities, you pay the taxes, you pay the insurance, and the house doesn't generate the income for you. So, by definition, a house cannot be an investment. On the other hand, when you have a multifamily or a rental property, the tenant pays the mortgage through the rent, right?
Yes.
Utilities, they take care of the utilities. The taxes are taken care of by the rent. The insurance is taken care of by the rents, and it actually generates income. So that's basically the difference. It doesn't really have to be a fourplex or 100 unit, and it needs to be something that produces income. In other words, basically, a single family home, if it doesn't create income, it's a liability in an income statement versus an asset.
Absolutely.
Liabilities, this is straight from Robert Kiyosaki, takes money out of your pockets, and assets put money in your pockets. That's the basic difference in investing. So whether it's crypto, whether it's stock market, whether it's whatever you're investing in, it should provide, generate income for you. So just real quick, we don't have to go through the whole thing, but this is just an example, a deal that I was looking at yesterday. This is in Indiana. It's a duplex. It's direct to seller, and the purchase price is 85,000. You can see over here. And assuming that we're financing this deal, at the end, you have the rents 700, which is actually low for the area, times two. It generates $1,400 every month.
Wow.
After all the expenses are paid, taxes, insurance, property management, maintenance, etc., you're still cash flowing $500 every month. So
That's pretty
that's
good.
what we call positive cash flow, free cash flow. You don't have to have a job for this. You don't have to even manage a property because you're paying a property manager 10% to
Mhm.
handle it for you. So that's what cash flow looks like. At the end of the year, is cash flowing approximately $6,000. This is just an example. We don't have to go through the whole thing right now, um, but I just wanted to show that. Now, in terms of the income statement, there's this is pretty much what an income statement and balance sheet look like, and I have three examples. First, we're going to start with the lower class in society, and this is approximately people that earn less than 45,000 a year. This is a rough estimate. I just got it from Google, honestly. But basically, what happens is that people have a job, and that generates an income. And the way the money flows is straight to the expenses, right? There's no assets, no assets that generate income. So
Mhm.
everything that is generated in a job goes to taxes, rent, food, transportation, clothing, and that generates generally what we call paycheck to paycheck. Now, when we go to the middle class, it's going to look a little different. That's when they, teach you, the American dream, buy a house, and you start getting some liabilities here. You get the mortgage, the car loan, credit card loan, or debt, I'm sorry, and even the school loans, right? You get
Yeah.
more education, but you get more liabilities as well. So the way that it works in the middle class usually is that you have a job, and that job really is already compromised by the liabilities that you have, that salary.
Mm.
And those liabilities eat up, with the expenses. And basically you end up the same, paycheck to
Yeah.
paycheck. So the third class, which is, the upper class, or what they call rich, um, more or less, from 140,000 over, there's a different, and not everybody will do this. Not everybody will do this, right? But the mentality, the mindset is that you acquire assets, right? You have your balance sheet, you have
Mhm.
assets. There weren't assets in the other classes, right? In the other balance sheet.
No, not at all.
And it could be real estate, it could be stocks, it could be notes. You may have an invention and you have intellectual property rights on that.
Mhm.
So those things create different streams of income: rental
Yeah.
income, dividends, interest, royalties. If you follow Shark Tank, you have heard Kevin O'Leary talk a lot about royalties.
Oh, yeah.
He loves their royalties. So now you have several streams of income, and there's no line for the other things, but it kind of talks by itself. Your assets pay for your lifestyle.
Hmm.
You know, of course you have a house. Of course you have other expenses, taxes, mortgage payments. But the difference is that there's not a job as opposed in the previous one. Once you become an investor, your assets work for you. So pretty much it means freedom and lifestyle. So that's pretty much the idea and how it will affect positively, right? Because everybody's looking for freedom, for balance in life, whatever. And investing helps in this. Now, of course, it doesn't have to be real estate. It can be other types of investment. My niche is real estate.
Hmm.
And real quick, I'm gonna go through three reasons why real estate, right? This is gonna be very simple, very straightforward. There's many other reasons. Um, but the first one is leverage. When you buy real estate, banks will actually lend you money to purchase real estate. You can actually leverage that 3 to 4 times the value of your investment. That's what's called putting a certain percentage down. So you can put 20%, 30% down on a deal, not the 100%. And just to put it into context, when you buy Bitcoin or Ethereum or whatever, the stock market, number one, the bank won't let you money to invest in the stock market. Number two, if you're going to buy cryptocurrency or stocks, you need to pay 100% of the value when you buy. You cannot just say, okay, I'm going to buy a Bitcoin. Right now it's at 50,000. I'm just going to buy it for 10,000. If you want one Bitcoin, you need to pay the whole price.
Right. Right.
In real estate, you're able to pay a fraction of the value and still own it and start generating income with real
Hmm.
estate.
Yes.
The second thing is multiple exits. You have so much flexibility. If it's a good deal, you can either refinance, you can flip, you can improve or renovate it, you can raise the rents. There's a lot of different things that you can do with real estate, and it allows you a lot of flexibility and safety. And the third thing is tax advantages. So there's the 1031 exchange, passive income is a non-taxable event.
Hmm.
Again, I'm not a lawyer or an attorney or a CPA here, so please, consult with your professional, um, like Sydney, for example. But this is one of the things that you can do to take advantage of tax law. Um, and that's in a nutshell, how real estate really helps you. And let me actually go back because we mentioned tax advantages, and this is very important because that's part of your income statement. That's
Yes.
part of your life. That's part of your expenses. Taxes, the more you earn, the more you have to pay in taxes.
Hmm.
Now, in this type of income statement and balance sheet, most of these, especially if it's real estate, you have less tax bracket, a lower tax bracket, even zero in some cases. So you can really see how by owning these assets, these expenses in the tax column will also be lower. So that's pretty much what I had. Um, you have any questions, specific questions about anything of this?
Yes, definitely. So you were talking about the difference between owning a property for personal purposes, buying it and then moving in as the owner of the property versus owning a property and renting it out to others. So, one, which is a very good point, one is just a liability, which a lot of people aren't aware
Mhm.
of. And that's the one that you decide to move into. And then the other one is an asset. Share a little bit more about that single family home that everyone seems to think is an asset, but really in actuality, it's just a place to live, right?
Yes, that you're absolutely right. This is very interesting topic. I think the easiest way to explain it is just to look directly into the mechanics of what happens when you have a mortgage. So the idea is that you put something down. Usually, people use FHA loans, or it's a 3%, 3.5%, 5% down. Conventional, you can even go all the way to 20%. But the idea is that you're going to own this house and you're going to own this mortgage for 30 years. And at the end of 30 years or 15 years, whatever the term is, you're going to own the house 100%. So it's finally yours. But when we look at the phenomenon of investing, is it creating income for you?
No.
Throughout 30 years, did it create income for you, or did you pay every single month for 30 years? That's number one. Number
Hmm.
two, once you pay it off in 30 years, where's the money?
Yeah.
The money's still in the house. So the only way for you to make money out of the house is either renting it out or selling it. And then you don't have the house of your dreams, right, anymore
Right.
because you sold it. So, maybe what a lot of people do is they turn their house into flips, and they will buy a house, live in it for a couple of years, maybe fix it up a little bit, or just ride the curve of appreciation, and then sell it a couple of years for a little profit,
Hmm.
ideally more than what they put down.
Yes.
And then it becomes a profit. Obviously, it may be taxable, so you have to really run your numbers and know what you're
Hmm.
doing. But you can do that. I know people do that maybe as they're growing their families, and their families grow and have more kids, need a bigger house. So they make a little profit here, and they put a bigger down payment in the next house. And then they wait a couple years for it to appreciate, and then they can sold for a little more, and then do it over and over again. Now, obviously, every time you do this, the clock starts again, and
Yes.
a lot of people don't like that because they're like, oh, I'll never own a house because I'm always moving. Well, I think most people are gonna move anyways.
Yeah.
That's the trend. That's not just me saying it. Everybody moves, right?
Yeah.
um, so. there's different ways, some creative ways. I think the idea for somebody that is interested in investing in real estate, don't get so hung up on I have to sell my house now and I have to start investing in real estate, right? Keep doing what you're doing, keep your job, keep your finances, keep building your base, keep saving, and there's other ways that you can leverage other people's money so that you
Mhm.
can also get into a deal without you having to put that much money into the deal. And then you get
Yes.
to start your feet wet and getting knowledge, getting experience. It's the same thing with any kind of investment. If you're in the stock market, you don't know what you're doing. Hey, you can definitely approach somebody that knows what they're doing in the stock market and start investing. Same
Mhm.
with real estate, same with crypto, same with whatever other kind of investment. Um, I hope that answers the question.
Yeah, and that goes back to the buy low, sell high concept, right? People think it only applies to the stock market. You buy the stock low and you sell it at its peak, take the money out, and then buy something else. Well, it's kind of the same thing you're doing with the home. The goal, most people think, buy the home while the value is low, allow that appreciation to work for you, sell it when it appreciates to the max that it could potentially grow to,
Hmm.
and then buy something else.
Yeah.
But when you're investing in real estate and you're buying units for income purposes, you don't have to worry about that value because you have the built in cash flow from the rents.
You're exactly right. If we go to that income statement in the upper class, the asset is because it generates income. When you're flipping houses, you may as well be in the middle class. Just, you have a mortgage and you're selling the house and you're paying taxes on that profit. And then you're getting another house because you need a place to live. And you're
Right.
playing with this, what most people are doing. Now, when you're really looking for cash flow, it's not a matter of riding an appreciation curve or, you know, buying low and selling high. Now let's actually look at these numbers again real quick. When you look at these numbers, I mean, you're looking at $500 for a duplex,
Right.
right? This is pretty good in terms of investing. I mean, I don't have the cash on cash return here, and my point here is that can one person live on $500 a month? This is very, very tough.
Mm-hmm.
It's almost, incredible. Like, we can't even comprehend how that could happen in this market, in this world, right? In the United States, at least. So it requires, what this tells you is that it requires several investment properties. You
Yes.
know, let's say you need $5,000 to meet your budget, your monthly budget. It means that you need 10 of these duplexes, which means 20 units. So that kind of gives you an idea of how much you need to acquire so that you can actually meet your needs and your goals.
Yes.
Now, as you're doing it, it will take some time, but you won't need to work towards it. My point is, for example, if you're flipping houses and you're just saving maybe to accumulate this amount of cash flow, number one, it's not going to be cash flow because you're working towards it. It's more an income, not
Yes.
cash flow. When you are acquiring properties, it may seem a little slower, but it will eventually give you cash flow. And
Mm-hmm.
if you decide to stop working, you're still receiving that income just for owning it. Somebody else is managing the property, somebody else is paying taxes and insurance and utilities. You're just in the deed, you're just owning the property, and it produces that cash flow. So that's the main difference, and that's what makes um, this upper class example of an income statement so valuable and so different from the
Mm-hmm.
others. So this
Yes.
is what most people do not do.
No.
It's a little hard to really comprehend because it's completely different to what we are taught from when we were kids.
Yeah.
But we're all learning. We're all trying to do our best. And if your audience definitely have questions about any of this, definitely they can contact you. Of course, you're in the financial education services, um, and of course they can contact me if they have any questions in terms of real estate.
Absolutely. So tell everyone where they can find you.
Sure. So people can find me on Facebook, as in Real Estate Rises. My phone number is right here. I always pick up the phone. Um, Not a lot of people call me though. People are kind of afraid of calling people when you give the number publicly.
Right.
And here's my email, realestaterises@gmail.com. And I'll be happy to help and answer any questions anybody has.
All right. Well, if you have questions about real estate investing, definitely follow Hector on his Facebook page. Give him a call and ask him some questions. Start blowing up that line. But definitely don't abuse him for sure.
No problem. No problem at all.
So it was a pleasure having you, Hector. I learned a lot about real estate investing. Definitely have more questions. That was the basics. The more intermediate side, I'd love to dig into that, start getting into those exits and
Yes.
why real estate is a long-term game, a long-term game and not a get rich quick. So maybe that's something we can discuss in the future. But I want to thank you for your time. And again, follow Hector, and we will talk to you soon.
Thank you, Sydney. A pleasure having me.
All right. Thank you.
Bye bye.